Hey traders, Richard K here from Price Action and Income. And in today's video, I want to discuss an analysis technique that was used by a very successful trader from the past named Roger Ward Babson. Now, as you all know, I used pitchforks in my own analysis, which was a technique developed by Dr. Alan H. Andrews. But what very few traders know is that Dr. Alan Andrews refined Babson's techniques to come up with the Andrews pitchfork. So since I use pitchfork so much, I believe that it's worth taking a look at Babson's technique, which he called action and reaction lines. Then we can look at some chart examples of how this technique can be used in a certain way to help you draw your pitchforks. Now, I often get asked, how do I know which pivots to use when drawing my pitchforks? And in today's video, I want to present a more advanced way of drawing them using Babson's action and reaction lines as a guide. Okay, so let's have a look at Babson's action and reaction lines on a chart to show you how they can be drawn to find future support and resistance lines and how they can assist you in deciding on which pivots to anchor your median lines to. Now, I specifically like using the following techniques on a larger time frame, like a weekly, because pitchforks drawn on this time frame will quite often define the angle or the slope at which a market is trading in for a long period of time. Now remember, it is always a good idea to keep these long-term pitchfork lines drawn on your chart and take note of them when price approaches them in the future again. Okay, so how did Roger Babson draw his action and reaction lines? And basically all he did was, and this is a very refined way or simple way of how I see how he did his stuff. There are more advanced techniques that he used, but basically, and on this example, this is Euro US dollar on a weekly. Like I mentioned before, I'd like to look at a weekly time frame so I can decide on which pitchfork to use to define this angle or slope that the market has been trading in since this high back in July. But before we get to the pitchfork, let's just have a look at what Babson did. Now, Babson used to select very important lows or highs. In this case, this was a very important low. Let me just find that quickly. And he would draw a line to an important high. Now, obviously, guys, this is historical price action, but what I'm going to show you now works really well historically, and then projecting that forward can show you previous occurrences in time where these lines actually work perfectly well. So what he would do is draw what he called an action line, and basically just selecting a very important low, in this case there, to this high over there. And what he'll then do is use that same angle and slope, and in my case I'm just going to copy and paste another line using the same angle or slope, and then go forward from this high and add that line to another important swing. In this case, you'll see that if we use this swing over here, that price actually came up again after making another low over here, reached this is what he called, we had an action line, price reacted from him, price then broke down, price then had a reaction again and went down again. So now if you continuously start copying and pasting these lines, action reaction lines, to other pivots in the future, then you'll see we had a small reaction over here. If we use that one over there, this low over here, you'll see that price was riding this line upwards, and as soon as it broke it properly to the downside with momentum, price came down again. And if we just copy and paste another one and we start adding into these lines, then you'll see that as time progressed, these action reaction lines didn't start working that well anymore. And this is why, especially from a weekly time frame, I like using my pitchforks as well. So although you can see that this angle or slope of this previous upwards move worked well to see where price found support and previous where it had resistance, I like refining this in a way that I like using it. And I'm going to use the same exact thing that he did over here, would have done over here, and instead use a parallel channel, or a channel like most of you guys will know it as. Use the same low. Let's just get that low over there, go to the same high I did over there, and take it to this first swing over here. And just get that 100% on there, and you'll see it's the same line, and we just use a channel in this instance. Now if I copy and paste this and continuously project it forward, then you'll see that my center lines, which is obviously parallel, but halfway between your upper and your lower channel line, in this case we're talking action-reaction lines from Babson, you'll also see that the center lines running at the same slope and angle were also very important areas where price reacted from over here, rode it up, and dropped lower again. Now we had another reaction here, but then since then price has been going sort of sideways. Price sort of pipped this lower channel line over here and then went upwards again. In this case we could probably see this as another reaction that happened in the past, but from where we projected from this high using this action and reaction lines. So guys, that's a very short, a quick explanation of what he did, and just a very simple technique. There are some more advanced techniques, I'm fully aware of that. But now what I want to show you in today's video is how do I combine or use these lines to decipher or decide on which pivots I should be using, especially on a long-term chart when I draw my pitchfork lines. Because since this high over here, we can clearly see that price being making low lows, low highs, low lows, lower highs. Oh, it's in a downtrend. But if I want to define this downtrend properly and give me a good idea at what angle or slope this market is moving in, then I can use my previous action-reaction lines to guide me and use them as pivots when I use my pitchfork. So let's quickly do that. Let's take my pitchfork. I just want to open this chart up a little bit, and if we use that high obviously as our first anchor point, because we want to slope the pitchfork downwards, and I use this low where price reacted from, and rather than using this high over here, which is like many traders will be using, you can see we had some reaction here which worked pretty well. But in my opinion, if we used this high here from where price reacted from using the action reaction lines instead, in this case guys, I'm using a shift pitchfork. Why do I do that? Because I can clearly see that if I would change to, for example, an original pitchfork, that it does not contain price very well at all. The slope is just too steep. So what about a modified shift pitchfork? Again, it works pretty well, but in this case, what about we use just the shift pitchfork, which was that first setting I had? And that clearly defines price action the best. And why is this? Is because even if I use these three pivots here, we'll see that price couldn't break through the upper median line here on one occasion. It buggered around here by the center median line for quite a while. It reaches 50% dash median line a few times, and then on the second occasion here in early Feb 2018, again price perfectly touched that upper median line and has since been moving lower and vibrating, as they would call it, up and below this 50% dash line. I would then definitely call, and this slope of this pitchfork, especially using the shift pitchfork and using these pivots, which was guided for me by using these action reaction lines rather than using any other pivot, because this in many cases, as on two very good occasions, stopped price from moving upwards and price is still continuing lower following this slope and angle of this pitchfork. So by simply using these action reaction lines, I could discern that using these three pivots were going to work much better than using any of the other pivots, like just normal standardly taught in guides trading pitchforks. But here's another quick thing that's quite interesting to help you understand or help you decide which pivots you should be using. And this is a technique I quite often use. It's very easy. And how I do that is I just take a ray. And what I want to do is I want to go to, for example, in this case, my lower median line, and I want to project a line backwards in time. And to see if there was any sort of reaction previously in history, to see if the angle or slope actually worked for this market, or i.e. going down, if there was any reactions. And in this case, we had this December 2004 high, which reacted from this actual slope or angle. And then in this case, we take the upper median line and we project it to this high over here, and you see these highs also occurred, projecting this top median line backwards. So you can almost pretty much say that this market is either following a shift pitchfork, or this, if you were to draw a channel line sloping lower, this market is operating in a downward sloping angle, which was respected by these upper median lines on numerous occasions and is currently now vibrating up and down above and below this 50% dashed median line. Now, whether price will now actually reach this low again, that's for anyone to decide. And this is obviously why you need a strategy that looks at more than just these sort of things. But another thing that I noticed previously, which is quite interesting, is that if we would copy and paste the angle of these slopes and put that over this current vibration that we have over here, then you'll see, if we zoom into that, that price is roughly still respecting, since this high here, following the same slopes as these median lines downwards. Now, I'm actually of the opinion that we could probably soon find support at this lower line over here. It'd be interesting to see what happens if price does reach there. It's not necessarily a trade recommendation, but this does look very overlapping, which could mean that this is some sort of a correction that we're dealing with, and we could probably see a reversal to the upside soon. But nonetheless, this market on a longer time frame, like a weekly, is operating and has been operating at a slope defined by these angles that I've just shown you. And that, in short, was just quickly how you can use Babson lines. And I know, like I said before, there are more advanced techniques, but if you just use simple techniques like these, they can quite often, especially in a larger time frame, guide you as to which pivots you should be using your shift pitchforks or standard pitchforks, or whichever pitchfork defines the angle or slope of the market's currently trading in. Then I have another quick example here on the US dollar rand, which is the actual currency from my country. And all I did was, since this low here in 2011, if I drew a line from here to this upper high, the highest high it's ever been, which was about 17.74, and which occurred on the 11th of January 2016, again a weekly chart, so it's around about the first month of that year, 2016, and projected lower to this pivot over here. Then we have another occasion, like our previous Euro US dollar chart, where price broke below and then retested that line. A lot of traders call this a kiss goodbye. And anyway, we had an action, we had a reaction, an action, and a reaction from that line again. And if you used your pitchfork, in this case, again, a shift pitchfork, using these angles as defined by your action-reaction lines, rather than using, let me just quickly see if I can move this one around. You see that both pitchforks work pretty well. But that being said, if you use those there, it works just as well. And what's quite interesting at the moment is that the US dollar rand is currently at the center line of this channel, which could also be seen as an action-reaction line. It's crossing there right at the moment and is struggling to break through. Here's another quick thing that I want to show you guys. You quite often see that although price broke below this lower median line here, but if you take a channel, you run it parallel and extend it to this low over here, and you copy and paste it and double it up and stick it onto the top, you'll see that these previous high overthrew this upper median line, but it failed to also break the angle or the slope of this market, which nearly gave us this high here again. So although my opinion on the US dollar ZAR is that it'll probably go up, it'd be quite important not to trade into these levels, but probably wait for some reaction. And once price does actually start breaking them, start looking for longs to the upside. And that, guys, in short, was just a quick introduction to a bit more of an advanced technique. These sort of techniques, the action-reaction lines, can be used on smaller time frames. I do obviously use a more advanced strategy where I'll try to find entries on the smaller time frames. But like I mentioned before, it is always great knowing where these longer term median lines are and your action reaction lines on a weekly chart, for example, just to make sure that you are not taking positions, trading into them, so that you're aware of where support and resistance is, especially when price approaches those levels again. And then using your pitchforks, they can help as additional tools to figure out the angle or slope that this market might be operating to into the future. And that, guys, was today's video. I hope you found that pretty insightful. If you don't mind, and we haven't done so before, then please hit the like button below and subscribe to this channel. Also, don't forget to hit the bell button to be alerted when we release our next video. Okay, guys, and that's it from me today. Until next time, goodbye.